Hi, everyone. I hope you're having a fun summit. I'm very excited to be moderating with you a topic that is sometimes unseen or unexplored for entrepreneurs is look at alternative avenues for funding. It's always good as an innovator to be creative, and there's creative ways to achieve those gaps. I'm joined with Liz Skalla, Cheryl Campos, and Dr. Roshawnna Novellus. And really excited to hear from you all. So if you could briefly go around and introduce yourselves and give a little bit background of who you are and what you do in the space. And we'll start with Liz and then Dr. Roshawnna and then Cheryl.
Hey everyone, my name's Liz. I'm co-founder of Given. We make Given Waters. We explored, in our own startup, different avenues of alternative funding and landed on invoice factoring, which I'll talk about today.
Hi everyone, I am Dr. Roshawnna Novellus, founder and CEO of Enricher. Enricher is a platform that pairs retail and institutional sources of capital with companies led by women, people of color, and other diverse founders. We focus on traditional businesses and provide them with working capital, all the way from photographers to coaches. We are that source of capital. And when I grew up in San Diego, California, and my mother told me that all women needed to be in charge of their economic power from a young age. So she made me become super familiar with finance, and I've followed that whole path my entire life, which brought me to Enricher.
Thank you. In great company. I'm Cheryl. I am the head of venture growth and partnerships at Republic. I'm not sure if you saw the news yesterday, but we just announced our Series B 150 million. So casual, but to be honest, joining 3 years ago, it has been an up and down journey. It is something that, it's just truly an honor to be on a rocket ship, but at the same time, we're doing it in support of founders, and we're making sure it's going, before and after, in support of founders and their happiness, right? And so we essentially are democratizing access to private investing. So we have about 2 million people on the platform that can invest in startups, whether they're accredited or non-accredited, with as little as $10. And then founders in particular can, put their, can really give a part of their company to their customers, use this as a marketing growth hack, and allow them to scale. And so, we have helped over 500 companies to date, which is very exciting. And at the same time, we're going to continue to grow and scale both the primary markets as well as the secondary markets, as shown in the press release that we had. So, very excited to be here.
Yeah, likewise. Thank you so much for the introduction. And how rude, I didn't even introduce myself. So I'm the Senior Director of Strategic Partnership for Kiwi Tech. We're a tech company that provides an in-kind equity model for software development. So that's how we support startup founders on the build of their platform. We also partner with investors. We have about 2,000 investors in our network. So focusing on moving the needle for accessing capital, and we open up a dialogue for underrepresented founders, whether it's of color, gender limited mobility, just making sure that we're creating a safe space as a private company to empower other ecosystem builders, partnered with StartOut. I'm originally from Tahiti, French Polynesia. I identify within the LGBTQ community, and I've supported as well StartOut through the index inclusion, so the impact inclusion index that they have. So really loving to bring thoughts as well of how sometimes for founders that are underrepresented, are not the usual founders that we see, we have to be creative. We have to hustle. We just hustle, right? So I'd love to hear from your side what some of the journeys that you've had in basically that hustle within the last, we'll say the pandemic, how difficult it has been, and accessing capital, or just making headways with your product or with your clients. Could you tell me a little bit more, especially from a CPG company? Liz, we were talking, one of my first angel investment was in a CPG company. And it could be really difficult and challenging. So I'd love to hear from your side how the pandemic has been, and what lesson learned that you could share from that side.
Yeah, so at Given, we turn everyday items into ways that enable more access to basic human resources for everyone. So one of the items that people buy every single day is bottled water. 200 million bottles of water are sold every day in this country. So that's where we started. And for us, we tie a social impact to that. It's one bottle equals 1 day of clean water for a person in need. And we've been able to provide, I think we just reached over 5 million days. We've only been in market for about 4 years. So it's been pretty quick. It's a roller coaster, right? For us being CPG, what's really the most challenging when it comes to finance is cash flow, right? So we have to pay for our product to be made well before our customers pay us on our invoices, sometimes 3 months, sometimes 6, sometimes 9 months. And so we're really depending on that accounts receivable to then pay our production runs and our suppliers. And when we don't have that cash, it can delay production runs. It can cause us to lose suppliers that make our product. It can even cause us to lose accounts because we can't fulfill orders quick enough. So we've been in that situation more times than I can count. We've gone through, really fast periods of growth where even if we do have cash flow in hand, then we get a ton of inbound orders, and all of a sudden we have to do double or triple their production run volume. So it can be really challenging, and we always have outstanding accounts receivable in the hundreds of thousands of dollars, right? So it can be really challenging, can be really frustrating. And when you're early, we call it the messy middle. So when you're in market, you have revenue, you're growing, you're winning accounts, you're still a startup, but you're not really like MVP anymore, right? So it's really this messy middle. You don't have, that cash flow to really sustain like those peaks, right, that happen. And so we find it's anywhere between a company making like 100,000 to even like 10, 15 million can experience this. And what we had to do was, we went to banks, right? You can go to banks, but you look awful on paper, right? Your tax returns, you're still maybe negative net income, you're spending, capital. It doesn't get applied to revenue or, income on the balance sheet, but it does get applied to expenses when you spend it. We've had times where we've gone back to our investors. We have a small but active cap table, and our investors are really supportive. But there have been times where they just couldn't re-up, and we needed to run. We needed to make more product, and so we felt really dire. And so we just started doing a ton of online research and discovered working capital loans. So things like invoice financing from Fundbox and Cabbage, invoice factoring from alternative lenders. We found things like Circle Up and Blue Vine. Those are some providers. And that really helped. I mean, we spent months researching all these different types of lending products and lending providers. It was a real journey. We finally took, I believe, in transparency, we took a term loan from PayPal and their loan builder product, and then actually regretted that, because then we learned a lot more about invoice factoring and how helpful that lending product can be. And you can get the most amount for the lowest APR if you find the right lending partner. And the collateral actually isn't that bad once you really understand it. So yeah, there's just a lot to learn. It can be really overwhelming, but that's just kind of a highlight of our experience.
Yeah, no, thank you. I'm sure. I mean, I remember at the time when I was following that investment. It's yeah, it can be nerve-wracking. You're like, oh, I have to deliver to Whole Foods, and I can't produce those pallets. So, and to that, Dr. Roshawnna, I know you're working to empower as well. You're working with startups. Do you have some in this space as well? How have they addressed that side of cash flow when you do have like an order or sale, right, a client that you have to deliver? What has been some of the alternatives? And then Cheryl would love to hear as well from Republic side, on the crowdfunding, how.
Yeah, so this is exactly what Enricher does. So we provide non-asset backed lending to traditional businesses. So we were able to help a lot of companies such as Liz, who had to change their, supplier chain, and a lot of times their suppliers needed a larger purchase orders than they did in the past, and yet they didn't have the financials to support them from other kind of sources. So we're able to finance a lot of CPG companies and other companies that really needed money. And it was really great for Enricher because a lot of organizations and corporations had to look at themselves and say, hey, do we work with any company like Enricher? Do we work with companies that have diverse leadership, CEOs that look like me and are similar to me? And most of them said no. So with us, we were able to get a lot more awareness about the importance of working capital, the importance of not requiring that collateral for these businesses, the importance of having alternative algorithms that score the ability to repay for diverse companies, because if you do what has been done in the past, the finances still won't work out. So it's really been, really good for Enricher, and really enabled more people and more institutions to say, oh, hey, you're doing something different. You're doing a great job, because we've had 100% payment, even in the pandemic. No one's ever made a late payment for anyone we've ever given money to on our platform. So we have something that's working, and it's been wonderful.
Congrats on that. And thank you so much for the support as well that you're giving. And I love it. Exactly. Bringing that accountability to the corporates, to the others. We need to be having, that's something Sarah from the StartOut mentions all the time that I always requote, is like, we need seats on the table, not the kids' table. We want to be on the main table. And that's exactly that. We need to, and bringing accountability, letting them know. And so that's great. Thank you so much for what you're doing as well for the community at large.
Hey, so for us, right, from day one, it's been about the cap table, right? It's been about how do we get people into the equity portion of a company that really aligns incentives? Because the moment that you are financially tied to their success, you will tell everyone, you will make sure your friends, your family, everyone knows that this exists. So there's a CPG company, right? Like, you'd buy it for your parties, or if it's a B2B, you might have someone in your network that could potentially use it. And that's kind of the value add that our investors bring, right? We have something called superpowers. So when you log in as an investor, you can also say hey, what's your superpower? What can you add value to this company? And you can say, I'm a pro bono lawyer. I am a retired accountant. I have these connections that can lead to millions of dollars of revenue for your company, right? And that's happened in the past. All these things that I just mentioned were superpowers that they were able to use. And quite frankly, it's the power of that community and network, and the power of numbers, quite frankly, because you have 5,000 people tied to your success. They will help you, and you will feel those influences. But one thing I want to mention is that it is not 5,000 people on your cap table. So very clear, it is using what we call the crowd safe. So it's a proprietary safe simple agreement for future equity that allows for folks to, so it's basically like a convertible note, except that it doesn't have a maturity date or interest rate. And what it really does is just allows, because every single person has the same exact terms, legally you're able to roll up into one line item. So I think that's really important and very founder friendly, because at the end of the day, we would not be adopted without the founders coming in. And I think that's super important, because when the pandemic hit, like Silicon Valley shut down. Like it was just for a while there, VC was not sexy because VC was non-existent, right? And so that actually was really interesting, because then everyone went, like we got like 3x our deal flow, because everyone was looking for new ways to fundraise. And so I'm sure you all have felt that in one way, shape, or form, but that was something that allowed for folks to be more open-minded about how they think about it. Plus the fact that we were all siloed in our homes really allowed for folks to put emphasis on community, right? People were like, I want to be tied to something bigger than myself. I want to, be able to meet other people like me. And I think that's what Republic allows folks to do at the end of the day, is to really bring together your brand ambassadors, bring that community forward, engage them constantly, be able to reward them for being day ones, right? And the last but not least, I'd just say that people are tired of being consumers. They want to be owners and they want equity. Like Beyonce said it best, pay me in equity. And I think it's that demand there, plus the, that need for capital that founders need, that allows for that to be all very financially and just mission aligned.
Thank you. Yeah. And to that, I mean, crowdfunding has been a crowdfunding equity platform are seeing a rise. That's for sure. The pandemic definitely brought and others to be more financially aware, right? Those not yet angel investors, but we're seeing with trends like Robinhood, others are just starting to invest, right? Like putting their dollars to work and also believing in others within their community. So bringing on capital. So that's, I think, it has been a very interesting trend. For Republic, is there a way, or what do you look for? I guess, I mean, I'm aware of Republic, but for those that are not so much in the room, what do you look for? What does it take to be on the platform? Could you just give kind of the high level of startups? I know in the QA, there was one person mentioning, beginning how to access the funding. So, and I know, Republic can be one, but there are some parameters. So I'd love for you to share that. And same way with on Enrich Her's platform, on your platform, Dr. Roshawnna, what you look for as well. That would be good.
It's okay, no worries. I mean, you just recovered from pneumonia, so like believe me, like props to you for even being here. So but in terms of what we look for founders at the end of the day, it's really, I mean, it's been changing, quite frankly. We have been growing and scaling, and we now have over 100 companies on the platform. So in order for them to have a good experience with us, to be able to bring a community and also shine on their own, they need to be relatively stronger than what we originally intended. So they have to be more on the seed stage. And I'd say definitely post-product, post-revenue. Companies that are making on average 100K a year that may have some community around them and will allow for them to have at least like 4 to 5 months of runway so that they don't die in the middle of a campaign. That would be kind of bad. And so, but we're industry agnostic, focus on the US only, but we have 33 states represented already. And our stats around diversity are incredible because we make sure that they're just good businesses, right? Like that, there's not as much as that bias that VC is known for, like 2% of women get funding, right? That's still crazy to me. And so to that end, that's kind of a little bit more what we look for. If they're pre-revenue, I would just say that they either need to have like some sort of community element around it, or, you know, that they have a serial exited founder that can really be anyone. So yeah, that's kind of a little bit of what we look for right now.
Cool, thank you.
In terms of what Enricher looks for, we focused on US-based companies with gender diversity that typically make at least 100,000 a year in revenue. So 100% of the companies we funded have women, and 85% also have one of the leadership team from a diverse group, whether they be Black or Latino or what have you, or Latina. And so it's very important to us. So we are able to fund typically between 50 to 250,000 per company, as long as they have sufficient cash flows. We funded companies all the way from companies that make dog treats to event planners to restaurants, to there's a whole gamut, and a few high growth tech companies, when they needed, let's say, a bridge round or to extend their runway if they were going to an equity round later, came to our platform, because typically it's quicker to get working capital than it is to raise an equity round. Not for everyone, but for most companies, it's a faster process. So we've been able to assist companies from 45 states so far, a little over 200 companies that we've been able to fund. And we're just excited to be in this market and hope that additional corporate partners and lending partners will continue to work with us, because we have over 98,000 business owners that have interacted with our platform. And so it's really easy for us to attract these diverse led companies that everyone allegedly is looking for.
Right.
That's really easy for us to do. And so it's like, hey, where are the capital providers? Are you going to put your money where your mouth is to fund these companies? They're amazing.
Right.
So that has been the challenge, but it's been fabulous for us.
Good. Glad to hear. And again, yes, it's sometimes the corporates and others, investors, I mean, they are looking for diverse deal flow. That's something that everybody, I mean, from StartOut's perspective, right? We're looking at bringing on specifically empowering the LGBTQ plus entrepreneurship. But as a whole, I know from my other, at Kiwi Tech, we have about 420 startups that we've engaged with from an equity side, have about 200 million of assets under management through that. A third of those startups identified within being underrepresented, whether, from a color, ethnicity, gender, mobility, or even has, from like Bunker Labs and Vets in Tech are some of our partners. So looking even from that side of, those are just different, right? Like really, we want to be, it's pretty cheesy, but there's all the colors of the rainbows. We want to see all of the colors, like just what it is. And the world is really a global place, and there should be global representation. It's inspiring, it creates, and really brings on dialogue to be more compassionate in differences. So I love that. Liz, to what Dr. Roshawnna was mentioning from working capital, right? Like how would you, for other startups in the room, I know you have strong expertise, but how would you, what kind of tips could you give in terms of that concrete, right, tips and inspiration as well to reaching those alternative fundings?
Yeah, so there's some practical things to look for. For us, our criteria, like through our journey of researching all the various types of lending products and lending providers, became pretty succinct. At the end of our analysis, we were really looking for a balance between three things. One, we wanted the most amount of money we could get. Two, at the lowest APR rate. And three, was at the most comfortable collateral. So there's all different types of collateral, right? You can put up inventory as collateral. You could, it can be personally guaranteed, which we didn't really like, or you can put up things like invoices as collateral. And so those were things that we were constantly looking at. And there's pros and cons with each. As we matured with our understanding, for us, using our invoices as collateral made sense. In the beginning, it sounded really scary. But for us, it was also a journey of finding the right lending partner, right? Like someone that we trust. Because what you're doing with that lending product, if you choose invoice factoring, what you're doing, what's great about it, you can get the most amount, right? You can get up to like 85% of all the invoices all your customers owe you. And then once those invoices are paid to your lender, you get the remaining 15% minus the lender's fees and interest. And the interest rate, depending on the lending partner provider, can be really low, right? We've found a partner that's like well under 1%. Of course, it depends on when your accounts pay those invoices. But what happens is essentially the alternative fund or the bank, right? So either a lender that has their own fund or a bank will pay you what your accounts owe you on the invoices. And then they go to your account and say, hey, now you owe us the invoice. And that's the scary part. And it really scared us at first. So we actually didn't go down that path at first. But then what we learned was like, well, actually the bank or the lending provider is actually contacting the accounting team. That's not who I sell into. That's not who orders my product. And they don't talk to each other, at Whole Foods or it's like the distributor of Whole Foods. And also the accounting team is so used to this, and it's a sign of growth. So there's a lot of nuances and things to learn. We spoke to just a ton of mentors about all of it and finally got comfortable. But yeah, those three things, amount, APR, and collateral were really what we dove into. And then I would say the other two are just, a lending provider that you like, that you trust, that you feel comfortable with, and that's professional, was really important to us because we wanted, there's, depending on which lending product you choose, you can either get, a lump sum, which is a term loan, or it can be revolving, like invoice financing or factoring, which means you kind of are always getting an influx, right? It's almost like a line of credit. So for us, that was really attractive for that lending product, was just having that revolving door, that possibility of we can actually do this every week, every month. We can have our invoices paid in 2 days versus 9 months. So yeah, those are the things that we looked for, continue to look at, and experienced.
No, thank you. And I think, but to that, it's that, I mean, at a later stage when you are also having those sales, right, from that sense, those orders and everything. But yes, thank you so much for sharing. I think the capabilities as well to find trusting lenders and is key, and those that can empower diverse founders as well, that look at that. That may also be, it's still an area that needs to have, I feel, diversity from that sense, which is why we haven't returned to and Republic. So to that sense, I wanted you tab a little bit on mentorship, Liz, and so I was wondering on that sense, a quicker light speed round on all of you three. Because that's also, I've seen it can be an alternative ways to funding when you have a good mentor, an advisor that can either open up doors from getting that sale or getting a first little check-in. Could you talk a little bit on how, what to look for bringing on board that mentor or that advisor, especially for those first-time founder or those first-time founder in a new industry, if you will. And Liz, if you want to jump back on that, and then
Sure. Yeah, just really quick, I guess for me, and I'm on my second startup now. For me, my advisors typically start as mentors, which is really just like a friendship that you're building, right? There's the exchange is non-monetary. It's I have questions, you seem like you may have experience or answers or insights, and then the mentor feels great for being able to share their experience and talk about their experience. So that's really the exchange. For me, when those mentors stay on and continue to show interest in your startup and what you're working on, that's a sign. And then if that is coupled with, their area of expertise being something that your startup can value from, right? Like a certain function of the business, then that's when, in my experience, we have then approached those mentors with an ask to become an advisor, and that's just a more formal mentor. That's it's a board. We have a board at Given, our board of advisors, and they're investors. They invest their time and expertise in us, and we give them equity.
Yeah, I mean, exactly. It's an alternative way of funding as well, having those advisors. Dr. Roshawnna, from Enrich Her's platform, from your side as well, could you share your tips on getting exactly those mentors, advisors, or what do you look for, what you've seen in on your platform work?
Yeah, so another founder gave me this great advice. Have someone with domain expertise, have someone with a lot of money in case things fall apart and they'll just give you money if you need it. Have someone that you can talk to all day long, if possible. You could spend 8 hours, talking about either strategy, personal life, what have you. And then have someone who's can really open up doors for you, whether it be with strategic partnerships or just whatever door that you need. And if you have a combination of those qualities, whether they be in 2 people, 5 people, what matters is you have those bases covered.
Nice, I love it. That's a great way to look at the scope. Yeah. How about you, Cheryl, from Republic's platform and also from your interaction with your founders and investors? What are the investors on Republic looking for? Do they engage beyond just the monetary side, right? I know there's different ask. I'm invested on Republic, so yeah.
Hey, love to hear that. Oh my God, this is great. So if anything, yeah, there's 2 certain things that I want to point out. One is the best, the campaign have done the most is when they have been prepared, they were able to engage the entire community, they were able to make them stakeholders, and that, they also keep the lines of communication open after a campaign, right? So keeping them updated, giving asks what they can do to support them as much as possible, or whether they're launching in Whole Foods, whether they are, just sign a new customer and they're looking for more things, if they're trying to get corporate sponsorships or something like that, all of these things are really important. And the companies that really make the most out of their public platform are the ones who are active and do just that. So that is one thing that we have that technical capability to, facilitate through our updates page, discussion page, all of that. And then, once you become an alum of Republic, we actually have a portfolio management team where we're able to connect them with VCs, accelerators, ecosystem players if they are raising, make those direct intros. We've gotten several of them already funded because of that. And that I think is really important because, as head of venture growth partnerships, that's also my job, right? We want to support founders as much as possible, connect them with great VCs that are, are looking for these founders. And we had a couple of deals that raised on Republic, then got their next round led by Andreessen, right? We had people who are also, just continue to be bootstrapped, right? And they're looking for alternative sources. And so the moment that we continue to really connect and make those bridges happen is when, the network effect starts spinning, and then they are able to give more to us and more deals, and it's just one giant flywheel effect. And so that's why I think, that whole give first and help them out mentality is extremely important in what we do. And that's why the community element is so important as well, because people understand that, they see us as authentic, that we talk and walk the walk, and this is a good way to do it.
Yeah, no, for sure. And the ecosystems are really trivial. And as Dr. Roshawnna was mentioning, you kind of need all skill. You can't be on all forefront, and having advisors that can really empower you in, different avenues, whether it's access direct, one that has a deep pocket, to one that, open up door. I love that one. That's a really good one. I didn't check in time, so there are a couple questions in the QA section that I'd love to touch in, and we dabbed a little bit in terms of the early stage startups, like how Amanda's asking more what's a good place, how to reach funding at the beginning as they move forward to getting their getting up to speed on their product. If anyone wanna.
So under 100K revenue, ARR?
Yeah, she's pretty much she's basically at starting at the beginning. So I'm assuming it's like building the building the product.
Yeah. So I'll jump in. I'm sure everyone has ideas. For me, we went the incubator accelerator route, and that actually then turned into, well, there was a fund behind it that actually re-upped during our angel round and our seed round at Given. So that's the route we went, and obviously, like, don't go in there with like a fundraising mindset, go to learn, but if it works out, you'll get capital. And then once you do have a little bit of revenue, I guess kind of the places that do tend to fund, I believe you'd have to look into them, but working capital under 100,000 or 100,000 a year would be like a fun box or a cabbage. But you'll keep in mind, you'll probably get gouged with APR rates, but you can look into them.
Yeah, I always tell people how I aggregated capital. So even in high school, I wrote 200 letters and ended up aggregating over $600,000 to pay for my college education. So right after I started Enrich Her, I started applying to pitch competition and grants, and I won my first pitch competition 3 weeks in about the idea. So I really recommend figuring out all the ways that you can aggregate capital from different resources, even with loans. So the first loan that I got was from the Latino Economic Development Agency in DC, and the underwriters were able to provide loans even before I was at revenue. So really look in your local community, your ecosystem, to figure out, hey, are there different, not only accelerators, incubators, but competitions, grants, different programs, and you'll see that you can get capital from a lot of different sources that will prepare you for more strategic capital later on.
Mm-hmm, mm-hmm. Yeah, and being resourceful, really scoping out, right? I love it. It's true. There's pitch competition or summit that have. I was advocating one that had $500,000 in terms of, and it's from the ground up, without just having a idea to a POC, but it was in clean tech. So half of the capital is pretty intensive there, but
yeah.
One
thing I'll say here too is, there's micro lending, and then there's through Kiva or something, and then there's also rewards crowdfunding, which is Kickstarter and Indiegogo. We generally recommend that to more understand if there's product market fit, if they're able to rally the community that way. And then in terms of other forms, to be honest, it's also like potentially pitching angel groups. At the end of the day, they are tasked with trying to invest in companies that are more at the ideal stage, at least pre-product, pre-revenue, and depends on which ones, but figuring out which ones are most applicable to you and kind of going down that route. Just caveat, they're not all the greatest either. Some of them might be a lot of due diligence in a lot of ways, can potentially be a journey, but at the same time, like Dr. Novellus said, right, like there was a hustle about really trying to get this money in order to make your vision come to life. So really understanding when that the cost benefit analysis of all of those.
Yeah, no, for sure. And but yeah, siloing to that, angel groups, can be good, and but also can be a journey and can act sometimes like early stage VCs. So, as we know, one other question that we have is if any of the panelists have experience seeking out lenders across states or even international borders, and if you see barriers from it. The person asking is outside of the US, and their country is risk averse in banking, finance culture. So they're just wondering whether there are US financing pipelines open to foreigners. So if you want to speak to that. If anyone has.
Really good question. I could ask our lending partner. That's a really good question. Yeah, we'd have to follow up on that.
Yeah, same here from our group. It's mostly US based. I mean, there are a lot of depending on which country. I know if there's an economic empowerment within a region, some look at that, right? If you're going to be creating jobs in a certain region out of your ideation, and then it's like through subsidies or a grant from that side. But those are the avenues that I'm thinking of. But yeah, good. Well, this was very, 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 very informative and empowering. I really enjoyed speaking with you all. If you have just couple inspiring words that you'd like to share before we close this out. And then if you don't mind putting any resources as well in the chat for the attendees in reaching, your programs or just yourself, feel free to do that. But yeah, inspiration is definitely my keyword for this panel.
Yeah, I think my inspiring words. Sometimes it's really having faith in your team. The reason why is because yesterday when we announced Series B, it was like really kind of sentimental, like thinking through all of the ups and downs, taking pay cuts or taking all these risks. And when COVID hit, we had no idea how that would affect us, and there was no investment on the platform for like a week or 2 weeks or something like that. It was just like there were so many grim moments that then make the moments like these that much more exciting. But the reason why despite all of those things, the reason why we were confident in our vision and mission was because of the team that you're on. And so I would say surround yourself with great people, like Dr. Novellus said, around like, who can support you in different ways, who do you have trust in, who can you be in the battle with great people around you. At the end of the day, it's all about that team that will really get you to the next place. And that also includes making good choices around both the hiring, but also the funding sources. It's about what most aligns with your mission, most aligns with what you're trying to achieve. And I think that's kind of been our strategy, like and talk and walk the walk as a company, but also supporting others. And so yeah, it's been a long journey, but honored to be a part of the rocket ship.
Yeah, no, congrats again on the Series B.
I would add, in addition to your team, focus on your why. Why are you in this business? So, whenever it gets tough for me, I think about all of the companies you said, hey, we're able to survive because Enricher provided capital. We're able to, have this power of our own lives. You helped us make our dreams come true. And whenever I'm like, forget it, I think of these stories and then I come up with new ideas or new strategies or you know, power and energy outside myself to move forward. So whatever your why is for being in business, like think about that and remind yourself, you know, even in the good times, not only the bad, but in the good times, why you're doing it, and make sure that your decisions and, like Cheryl said, all your team is in alignment with your why.
Yeah, I totally agree. I mean, having a North Star is what gets us through those valleys. For us, we celebrate pretty hardcore when we have a peak. And for us, I would say at Given, the word perseverance is one that we use with our team. You know, a no is just a not right now, and you know, we just have to have that hustle and grit. And that it's a roller coaster, but it moves forward. So as long as it's trending up a little bit here and there, and sometimes more than others, but yeah, it's really just, it's perseverance. It's not going to be a fun day every day, but they'll be there. The fun days will be there.
Yeah, as the ED of StartOut says often, onward and upwards. I mean, that's exactly, at least there's that roller coaster, but we're moving forward and onward. So, and to that, it's onward and upwards for more diversity within not only startups, investment, but also corporate. That's, you know, bringing accountability. So thank you so much for joining us on this summit. I really appreciate, and I know how valuable it is. I've been reading a little bit on the chat. So yeah, everyone's been really impressed and grateful for the information that you shared today. So thank you so much.
Thank you.
Nice meeting you guys.
Thanks.
Bye.
Nice meeting you. Bye.
Bye.